Sorry I've been on a leave of absence and haven't reported to you, but I've been writing my new book, which is the sequel to The Aftermath of Greed. The title of my new book is How to Profit from the Coming Inflationary Boom and Avoid the Crash. But what our focus is today is on the inflationary boom, or as I've titled it, the Obamanation Boom. You'll have to excuse that. You know, it's all of these programs, all the stimulus. We'll look back a year from now and this will all be overkill. I mean, it's just absolutely incredible. But what I want to ask you to do is, I think that in order to realize gains from what is about to happen, you have to separate your political ideology from economic reality. Now, the economic reality is that this impetus, this stimulus is all underway now. And we're not going to change the administration. In the next couple years, Obama is going to be a rock star. The economy is going to be booming. Everybody's going to be euphoric. The socialists are going to be saying, hey, look at how wonderful the economy is. But this is a short-term boom. Maybe 1, 2, 3, 4 years at the most. But what we got to do, and listen, I'm absolutely convinced that the socialists will ruin the economy. And I'm absolutely convinced that they'll not only destroy the economy, they'll destroy themselves. Nancy Pelosi is a perfect example. Foot and mouth, her lying, and actually that is just the first inning of a long ball game. But what we need to do is focus on where are the profit opportunities. And what I'd like to do is take you back to that you've read on my blog in December, I think it was. I wrote about the bond bubble. Now, that was really being out in advance of the actual fact. What I was simply saying in the bond bubble is that we saw the real estate bubble burst, we saw the stock bubble burst, and now the bond bubble was going to burst. And now it has. And I was way in advance of that in December. There's $9 trillion in money that had gone into a safe haven because of the sell-off in the markets and the deflationary impact. And as interest rates went down and there was more concern, the bond values increased. Now that money is reversing course and it's going out into equities, it's going out into real estate, commodities, and so forth. So I was right ahead of the curve on that instance, and I hope that it helped you in your investment selection process. Also, on March 12th, I wrote a piece on my blog here called The Retail Boom Ahead. And what I was forecasting is that by December this year, we could conceivably see a retail boom. Well, you know what the mantra is in the retail business today. It's slash prices, slash inventory, slash margins. Get rid of everything you have. Well, that's what everybody's doing, but by the end of the year, you ain't going to have anything to sell. And I believe that all of this pump priming and the stimulus and the stimulus checks that are going out and people are saving money and the TELF program, all of this is going to result in a retail boom. And of course, we're going to have what's set up is just a perfect situation where you have a supply-demand imbalance. I believe that then we will see the beginning of an inflationary trend, and it could be quite significant going into 2010. So what other indications do I have? What other indices tell me that the inflationary boom has begun? Well, I want to go to just some evidence that's obvious. We'll start here in Phoenix, is that the Phoenix housing market has suddenly just started to come alive. Now, I forecast this 6 months ago, and everybody thought I was nuts. Certainly, the Phoenix market led the way on the way up, and it certainly was dramatic on the way down. But in the month of April, there were 7,000 single-family homes sold in Maricopa County, in our Valley area, and 19,000 more in escrow. That is a significant change, folks. And what's happening too is that the bank REOs, what they call REO or bank-owned real estate, the market has improved so much in certain areas of the valley that the banks have withdrawn their REOs from the market because they can see, the bankers are slow to catch on, but they do see that the market's improving, they'll get better value for their homes. Also, the University of Michigan Consumer Sentiment, I follow that very closely. In February, it reached near low of 56 on that scale. In mid-May, it was already up to 68. And of course, this is the sentiment is how people feel about the future, how they feel about their jobs, spending habits, and so forth. Also, some people didn't really notice this, but when all the economists are talking about deflation in prices of commodities and on consumer goods and consumer spending, Kellogg, Kraft, and Hershey, which are basic, food products, increased prices and increased profits in the first quarter this year. That's amazing. It shouldn't happen in a deflationary environment. You've all noticed that gold and silver has risen 20-25% since the first of the year. And I think the precious metals are basing for a major move come fall and into next year, which is a strong indicator of inflation. The CRB, the Commodity Research Bureau Index, is off its highs. You can look at any chart, and China's back in the buying business again. The ships are flowing from South Latin America and from the U.S. to China with raw materials, copper, steel, everything they need. Their economy is rebounding dramatically. And I look for the contrarian outlook. The Federal Reserve is telling us there's no inflation in the system and we have subdued inflation and all that baloney. And they know they're trying to reinflate assets, and it's just that's a good contrary opinion. Anyway, what the Fed says, don't believe a bit of it. And the economists, they take a poll of these economists periodically, and the consensus is that we're in for a long slog. Now, isn't that great? In other words, it's going to take 3 to 5 years, they say, before the economy recovers. Nonsense. In another year or two, we're going to be back almost to where we were before. Obviously, value's got a long ways to increase, but consumer attitudes and everything will change. Now, here's the big picture. And imagine this, if you will, and we look at, major macro trends. There are over 1 billion people in this world that are going to move, according to economists, they're going to move from poverty to becoming consumers. 1/7 of the world population. And the U.S. is going to export to a lot of those people. But just imagine how this is going to change the dynamics of the global economy. Anyway, inflation boom has begun. Call it Obamamania, call it Obamanomics, or whatever you want to call it. But we've got to capitalize on that. America has an opportunity to restore the wealth that it's lost, and you can do it in the next 2 or 3 years. I will visit with you again soon and keep you up to date. Goodbye.